Strong and Tim Schmadeke at Financial Brokerage. We just want to thank everybody on this call today, and I want to thank Cody Lodemeyer for hosting it at North American, one of our favorite partners to partner with. I want to start out with just a couple quick housekeeping items, one of which is the trips that we have. We have a Canadian fishing trip that only requires $875,000 of annuity premium. There is also a trip to the Broadmoor, which is only $1.125 million of premium for a production. And then also want to spend a moment talking about a referral program that Financial Brokerage has, that if you, the agent, refers another agent to us and they do any line of business, whether it's life, annuities, long-term care, DI, med sup, there is a bonus for you to get over the next decade. Well, I like to refer to it as an agent's deferred comp program. So without further ado, I'll turn it over to Cody Lodemeyer to discuss a new product at North American. And Cody, thank you very much for your time today. Tim and I very much appreciate it.
Oh, of course. I appreciate you giving me the opportunity to talk about our newest product that we've recently launched called the Strategic Design Annuity X, or SDAX for short. I'm going to try and call it the SDAX so that I don't tongue-tie anybody or myself. We will be going into some of the key concepts and how to use the product within the industry, how it might be different from the traditional product within the North American portfolio, and then kind of some newer items that we've brought to the table. And we'll absolutely touch base on those. What I'm not going to do is kind of waste anybody's time. I'm not going to go over all the nitty-gritty product details that you might be able to find on a quick reference guide. So do keep that in mind. You can always call into Financial Brokerage, get that information. Deb's fantastic, has it available, and we'll be able to assist you with that. Without further ado, let's kind of dive into the Strategic Design Annuity X. Now, before I do start this presentation, I always like to get some disclosure slides out of the way. I always seem to forget those at the end. So one of the main things about the Strategic Design Annuity X is it's a deferred participating income product. So it's an income product that does have a deferral period, and it's a participating income product compared to a guaranteed. So now that we've got kind of the basics of that product out of the way, it does have an issue age from age 50 to 79. This product, of course, is a 10-year surrender, which is going to be 1010 compliant for those registered reps working with a broker-dealer out there. Something that's going to be a little different from our traditional product within our portfolio is this does have a $50,000 minimum. This product was designed for income planning, and traditionally income planning deals with the higher dollar amounts. I don't think it's any secret to say by having a larger initial premium, it does help our product pricing and keep those rates up long term, especially because this is a participating product. Now, that being said, something else that's going to be a little different than our traditional product portfolio is it is a single premium, meaning once the policy is issued, no additional premiums will be able to be added. This product does have a built-in rider that cannot be terminated, and that rider does have a fee of 95 basis points. One of the cool features of this product is a nursing home confinement waiver, and that is if the client gets confined to a qualified nursing home facility for 90 consecutive days, we'll let them essentially walk away with up to 100% of their accumulation value. Well, without further ado, I want to show one piece that North American has created in order to highlight some of the benefits of the strategic design. I did it there, the SDAX. And that is this flyer. Really, we walk through creating this cross. And kind of the first step to it is taking from the bottom left to the top right. What does that mean? I like to show that is markets going up. You're deferring your income out. And the way that the income account value is going to grow is a 200% roll-up. That 200% roll-up is based off of credits to the accumulation account. So for every percent that your accumulation account earns, 2% would then be applied to the income account value. Now, I think it's very important to mention that it's a percentage of interest credits and not a dollar amount of interest credits. That is going to give us the benefit and the upper hand in regards to that. I do know there are other products within the industry that do have a 10-year deferral period that base it off of the dollar amounts of interest credited, which will hurt you in the long run in those longer deferral periods. The maximum roll-up period is for up to 20 years. So the longest somebody would be able to defer the income and continue to grow that income account value is 20 years. The minimum deferral period is actually 10 years for that income rider. Now, we all know of certain products within the industry that do have the 10-year deferral periods, and North American has created some workarounds of how to get funds out of this annuity prior to starting that lifetime income stream after the 10 years of deferral. That's where I hop into, before I hop into that, let's talk about the 200% roll-up. I think it's pretty clear cut and dry. Whatever your accumulation account earns, we simply double it, and that gets applied to your income account value. But you'll notice in the 4th year, there's a 0. We do have an indexing strategy that can guarantee that your client will not receive a 0 in regards to an index return. And we'll talk about that here in a little bit. But as I talk to you about the 200% of interest credit roll-up, that sounds great, but we really need to see some numbers behind it to show the true benefit of the product. So North American took our S&P Mark 5 index, which is our multi-asset risk control, and applied it to this product. Why I like that we chose that index is because we actually didn't cherry pick our highest crediting index over the last 10 years. You'll notice here we did a 20-year look back on $100,000 and applied it to the lowest 10-year scenario in the last 20. That income account value grew at a 8.31%. I think everybody would agree that that's a pretty solid roll-up in regards to an income account, especially because that is based on a compounding rate. The most recent 10-year period is at 11.60%. So that is going to be an average over those most recent 10 years. Going to be a fantastic roll-up percentage and almost doubles a lot of guaranteed income riders within the industry. Now, I know ours is participating, and this can always fluctuate. However, we are looking at the hypothetical 10-year lookbacks. Now, I never like to sell off of the highest performing, but it does show at a 14.22% in the most from 2001 to 2011 using that Mark 5 index. So now that we have these numbers, you can get really any of these numbers for any of the allocations or crediting strategies through an illustration. North American has created a marketing piece that actually takes this exact photo that you see here, and we made it available to our agents and clients moving forward. Now, I did mention the second part to the X. The second part to the X is going to be in regards to the penalty-free withdrawals. This is how you can get past that 10-year deferral before you're able to start that lifetime income stream. The base product of the SDAX has a 7% penalty-free withdrawal starting in year 2. Well, we have added an enhanced penalty-free withdrawal schedule to boost that. I'm going to go ahead and show you that schedule in just a moment here. But something that is important to mention, that our penalty-free withdrawals are going to be based on initial premium. So what does that do? That's going to provide structured, consistent, predictable withdrawals for your client. We're not basing it off of the current accumulation value, which could fluctuate and does fluctuate when they take a withdrawal. So by having the penalty-free withdrawals based off the initial premium, it's going to be for those income planning situations, which this product is exactly designed to do. So without further ado, let's talk about the enhanced penalty-free withdrawals. What I want everybody's eyes to shift to is the very right-hand column, the total. Part of the fee that you're purchasing of that 95 basis points is this enhanced penalty-free withdrawal. So you'll notice in year 2, they start at 10%, and they increase until you hit the 8th year at 32%. Whatever year the first withdrawal of the policy is taken, that is essentially going to lock in that percentage of the initial premium for the remainder of the surrender schedule. So what does that mean? If your client defers until taking a penalty-free withdrawal until the 6th year, their penalty-free withdrawal is going to be 20% of their initial premium. And it's going to be 20% that they'll have available every year moving forward through the end of the surrender schedule. So one thing that I like to point out in this is if you start the 10% withdrawals in the second year, by the end of the 10th year, you can get your entire premium back out. Or in the sixth year, if you want to start taking out 20% of your initial premium, you can get all your funds out by the end of the 10th year. Or that even works in the 7th year concept. So I have seen people use this product. They put 100,000 in. By the end of the 10th year, they've taken out 100,000. And you say, okay, Cody, that's all well and dandy, but for 10 years, I didn't earn any interest. You're correct, but your accumulation value and the income account value did continue to grow while you were taking those withdrawals. And what your interest is the remaining lifetime payout. You've already got all of your funds back, the initial premium that you put in. What you're going to receive in the future is going to be that lifetime income stream based on the returns of the market. So that's going to be the second part to the X. The third is the inverse edge trigger. This is a first to market index based off the S&P 500. Essentially, your client will receive either a 2 or 8% if the S&P is neutral or negative. So once we apply the 2 or 8%, when you get the 200% roll up to the income account value, you're going to receive a 4 or 16% roll up. So what I'm telling you, essentially, your clients have the potential in a down market to get a 16% increase to their income account value. I think that's going to be a pretty strong story. It's generally easy for advisors to earn money in an up market. It's the great advisors that can earn money in a down market or show that value in a down market. And this is one index allocation that is going to be able to do that. Let's dive a little further into that index allocation and show you exactly how it works. This example is taking all the premium and putting it into our inverse edge trigger. If the S&P is positive in a given year, you'll notice the client receives a 0 credit rate. This is only going to produce a positive credit if the S&P is neutral or negative. If it's neutral or negative to a negative 9.99, the client automatically gets a declared 2% that applies to the cash accumulation value, which means a 4% gets applied to the income account value. If the S&P has dropped over 10%, your client would receive a 8% return to their accumulation value, meaning that income account value doubled that and received a 16% credit in a year where the S&P was down over 10%. That's going to be a pretty strong story. And of course, just different flexibility and availability. I don't like to sell products based on indices. However, it's always nice to have an option when the market is down where you can receive a positive return. That's generally one of the kicks that I hear on fixed index annuities is it's all well and dandy. You give me that principal protection. However, in a down year, you're telling me that I have to go into the fixed rate account to see any positive return? Well, not with the new North American SDA X product. I did it again, Strategic Design Annuity. So now that we've talked about that inverse edge trigger, fully went through the X, the 200% roll up, the enhanced penalty-free withdrawals, and the inverse edge trigger, let me show you the rates on this product. Some things I want to point out. If you look all the way to the left-hand side of the screen, you'll notice that all the allocations or indexes are S&P based. We did that for ease with your clients. I know there are some other indexes like a Morningstar or a Janus or just other indexes within the industry that I'm sure if you were to ask your clients if they've ever heard of it, they'd probably say no. Most clients, if you ask if they've heard of the S&P 500, even if they're very undereducated of what it is, they've generally heard of it. So it's that ease of recognition. Additionally, North American does not have our hand in the pot for any of the alternative indexes, such as the one that we have on this product, the S&P Mark V excess return. So do keep that in mind. That is a multi-asset risk control index managed by the S&P 500. That is an uncapped strategy that's either in an annual or 2-year point-to-point. And right now we are using 100% participation on the annual point-to-point and 130% participation on the 2-year point-to-point. I love that North American had switched over. Traditionally, we had always used a margin or a spread with the S&P Mark V. Well, I believe most clients would understand a participation rate a little bit more. So we made that story a little bit easier for you to explain as a producer. Now, traditionally, an income product does not have a 45% participation rate or a 5.25% annual point-to-point cap rate on the S&P 500. I don't think it's a lie to say that when you purchase this product, because it does have that fee associated with it, it does help buy up the rate, which helps buy up the income for your clients as they're living. However, by having a fee, it traditionally reduces the death benefit of a product. So when I had asked several of my friends if they would prefer to have more income while they're living or to provide more of a death benefit to their client, traditionally, most of them stated more income while they're living. If they wanted to provide more of a death benefit, we might transition over to a different product within our portfolio. But by providing such high caps and rates, it does help that income account value grow to its maximum potential during that deferral period to really boost up that income moving forward. One of the other items that you're going to get for that 95 basis points fee is an accumulation value step-up feature. Here's an example of how you calculate the accumulation value step-up feature, but I'd rather talk to you about what it is. At the end of the 9th and 10th contract year, if the fee has negatively affected your accumulation account, we'll automatically step you back up to the initial premiums that you put into the policy, of course, subtracting out any withdrawals that have previously been taken. So if that fee has negatively affected you and the interest credits over that 9-year period do not outweigh the fees associated with the product, we will automatically step up your accumulation value to that original premium amount. That happens at the end of the 9th and end of the 10th contract year. Now this is where it's going to get exciting. In regards to the lifetime payment, North American makes it available for a level or increasing lifetime payment based on the time that they elect that income stream. We don't force your clients into an increasing or a level option. We give them the option. We don't force them to choose if they want it to be level or increasing at the time of application. We give them the option at the time that they need the funds most when they're electing that lifetime income stream. So that's absolutely going to be a huge benefit to your clients as well. It does offer a single or joint payout, even for qualified money. If the spouse is the sole primary beneficiary, they would have the option of doing a joint covered income to cover both of their lives. One of the best aspects of this product is the LPA multiplier benefit. Now, I know I mentioned this product does have a nursing home confinement waiver built into the accumulation account. Well, built into the income account is an LPA multiplier that is based off of 2 of 6 activities of daily living. Meaning if your client cannot perform 2 of 6 activities of daily living, we will double their income for up to 5 years. I think it's going to be really important as confinement is becoming less and less of a trend. More people want to stay in their house longer. And traditionally, when people stay in their house longer, the responsibility falls on their children, their family members. Well, this is a great option to double that lifetime income and provide them with a financial benefit to help ease the burden of assisting with those activities of daily living. Now, another important aspect to the income and the calculations behind it is the lifetime payout percentages. You'll notice from age 60 to 85, our lifetime payout percentages are going to be extremely competitive within the industry, and they also increase by 10 basis points annually. Now, I do know that there's some products out there that either have a 10-year wait until that next increase or even a 5-year deferral until the lifetime payout percentages increase again. Not with the strategic design annuity. Ours are going to increase every year by 10 basis points, meaning your client will always have a benefit. If they want to defer it out, they absolutely can. You'll see here that there are some differences between a level and increasing, and then of course a single or joint covered individuals. Now, keep in mind, All this is available within the brochure, the quick reference guides, and the highlight sheets, so you don't have to try and memorize or write down these numbers. We can get the material over to you at any point that you would like. Just go ahead and give Deb Strong a call. North American has also created a marketing piece that covers 2 different key competitors within the industry. I think that you might be able to call into Deb and she might be able to tell you which products we are comparing them to. I'm not going to be able to say it just for compliance reasoning. However, I can tell you competitor A is one of the top selling FIAs within our industry currently. And it's a pretty clear story how North American is going to win. Now, a lot of people might say, Cody, this product has a fee, it is participating. Absolutely. Having that flexibility is going to allow us to be able to keep those rates as high as possible and also provide that highest lifetime income stream to benefit your clients moving forward. The compensation for street level, you'll see it at the very bottom of the sheet there. It's going to be extremely competitive and currently at 7%. Now, we have touched base on most of the product's materials. However, we haven't looked at all of them. These are just some of the flyers that North American has created to discuss the SDAX product. And really, each one of the benefits it highlights, such as the bottom left-hand corner, it's the activities of daily living multiplier. To the right of that, it's the penalty-free withdrawals and how those can benefit your client, or how to describe the benefits of this annuity with the X or the inverse edge trigger. Our marketing communication team is fantastic. They're award-winning. We have plenty of different pieces available on our website or to order, and some of these pieces are even customizable through the North American website. So by having these customizable, you're able to take your contact information or even your company logo, put it on a North American branded flyer and blast it out to your clients or send it via email. That's going to be a huge benefit so that they're calling you directly, not calling into the carrier of North American, so that you can make sure that you get that sale closed. Now, Deb, I know I ran through that product extremely fast. Is there any additional materials that you would like me to touch base on in regards to that SDAX, or anything that you might have listened to or heard of that might ring a bell in your mind? Deb, are you available?
Cody?
Yep.
Yeah. Okay, thank you so much. I appreciate it. A couple things I wanted to just make note of is that I love the safety valves that North American has put in place with this product for the what ifs. What if I need more than my 10%? What if, what if the market goes down? Can I lose money? And you've got that step up on your accumulation value in the 9th and 10th year. I think you've heard me say it before, and I'll say it again. When we retire, every day is a Saturday. So are you going to have enough retirement for your lifetime of Saturdays? And a product like this that's flexible in its design can help so many of us. Tim and I get calls every day about the people in this country that might be retiring early, 50, 55 years old, and they're going to want to start their pension in 10 years. I think this product would work wonderfully for that. And Cody, you're probably sick of me saying this, but I love partnering with you and North American. You guys have very innovative products, and we're grateful for your time today. But most of all, I want to thank everybody on this call today. And when you have a case, call Tim Schmadeke or myself and tell us about the type of case that you're working on, and we'll be glad to direct you in the right place. And I think this definitely has a huge spot in the marketplace. So, Cody, thank you for your time. Tim and I really appreciate it. And thank you, everybody, for being on this call.
Of course. Have a great day. Enjoy, everybody.
Bye-bye.